Well, longtime Morgan Stanley insider Ted Pick will succeed James Gorman as CEO on January 1st, ending a widely watched succession race inside one of the biggest firms on Wall Street. So, how will Ted Pick help one of Wall Street's most prestigious banks continue to thrive? Let's bring in Chris Whalen, chairman at Whalen Global Advisors, to discuss. Good to see you, Chris. So talk about this succession here and what this means, especially at this point in time when we're obviously coming at a point of high interest rates and in the thick of earnings season as well.
Well, obviously the tenure of Mr. Gorman was successful. He picked up the pieces after 2008 and he pivoted and turned Morgan Stanley into an asset manager. So today they are a direct peer of UBS, which is clearly the winner in Europe. And I think among what I call the asset gatherers in the U.S., Morgan Stanley is by far and away the best positioned firm. Now, having said that, they are still going to have to work the stock price down a little bit because they're still way overvalued after 2020-21, when all of the big sell-side firms saw a huge lift in their stock prices because of the volumes in the market. We don't have that today. So I think Morgan Stanley's in good shape. Good choice in Mr. Pick. They've kept the other contenders happy for now, which is very significant. And I think it shows you the culture of the firm. They are doing an orderly transition, and it speaks very well.
And Chris, when you think about where Morgan Stanley is right now, especially you looking at revenue from investment banking and trading falling in Q3, what is he inheriting here? And what are investors going to need from him from this point?
Well, what he's inheriting is a nice, stable three-legged stool. If you compare them to Citi or Goldman Sachs, they're clearly better positioned because when capital markets and really the transactional side of the business slows down, you have the big asset management portfolio. That was the plan, I think, that Gorman had all along. And remember, people were critical of him for spending the money to buy the other firms that have given them this position. Now, those decisions look pretty solid because there's nothing left to buy. There's nothing for a Goldman or a Citi to buy to complete their business. So I think overall, this is a good time for Gorman to be picking a successor. But let's face it, the business is going to be hard for the next couple of years. And shareholders are going to have to figure out, do they want to stick with the stock or do they want to back off for a while until there's more of a driver, more of a catalyst on the capital market side? Because it's going to be quiet this year. It's going to be quiet next year.
And when you think of the turnaround story, Pick's contributions to turning Morgan Stanley around when it was having, obviously serious problems back in 2008 and the financial crisis, how do you think that experience positions him now when we are in very uncertain times when it comes to the banking industry?
Well, they're only partly a bank. Let's remember, the big business unit at Morgan Stanley is the broker-dealer. They do have a big bank, though. They've got $500 billion in core deposits, which is great. So when you look at those two pieces, it gives them strength. It allows them to fund themselves, albeit on an arm's length basis. And I think that gives them a lot of tools and a lot of ability to manage the change you're referring to without having to go hat in hand to the street. So if you compare them to Goldman, where funding costs is probably the single biggest vulnerability of that firm, then I think it's night and day. Let's also remember that Basel is coming. Let's also remember that we're going to see centralized clearing for treasuries coming up very soon. This is going to tend to de-risk the street. You're going to see less leverage in terms of derivatives and other activities, which have been important to Morgan Stanley. So now they're going to have to, make a change. They're going to have to emphasize different parts of the business, which are growing, like asset management. And over time, the deal flow will come back. But this year so far, as you know very well, looking at IPOs, this has not been a tremendous year so far.
And how would you describe Pick's leadership style versus Gorman, especially when you think of some of the big personalities, your Jamie Dimons, your Solomons? Where does he rank in that?
I don't really know. I don't know him personally. The fact that he has a low profile is because he's a banker. Bankers are best seen and not heard. I don't expect him to compete with Jamie Dimon as a public personality because, that's evolved over decades. Jamie's good at it. He's got a great command of his business, so he's able to speak extemporaneously during earnings calls. I expect Pick to be quieter, and I think he's going to keep focused on the business, much like Gorman. I wouldn't see a whole lot of difference between the two styles because the culture at Morgan Stanley ultimately, I think, is what saved that firm. It was the people, the quality of the people they have, and also still an old legacy of the old Morgan culture, which I think held them together while they built things like program trading, for example. So they're now able to compete head to head with Goldman if they want to. They were also very big in derivatives. In fact, they're bigger now than Goldman in that regard. So I think over time, they're going to have to adjust these businesses in the new regulatory environment. And also, we may have interest rates where they are for a long time. That's a different market.
Indeed, a different market indeed. Appreciate your insights, Chris Whalen, Whalen Global Advisors Chairman. Appreciate you joining me this morning.
Have a great day.
You too.